Okay, what are you saying, people, and welcome back to your favorite YouTube channel. So today, guys, I'll be focusing on how to get the best from ranging markets. So I'll be focusing on a specific type of entry in this video. Again, there's a million and one different ways to trade ranging markets, and in fact, if you want me to go deeper into other ways to trade ranging markets, leave a comment down below for that, or leave a comment down below if you want me to make a different type of video. You request a video on different topics, let me know. Or if you're just enjoying the content, you want me to make more of the same videos, so let me know, guys, in the comments down below. But today I'll be focusing on a specific type of technique, specific type of opportunity in the ranging market. I'll be showing you what to look out for, how to enter it, what to avoid, and also a potential opportunity that I'll be looking out for in the markets this week on Euro AUD, using the exact same pattern that I'm sharing to you in this video. So like always, subscribe, guys, if you haven't already. Drop a like, it really does help the channel out, and hit the notification bell if you haven't done already, so you don't miss out on any uploads in the future. Before that said, guys, let's get straight into it. Okay, guys, so before we get into the actual markets and I show you some actual real life examples, I'm going to show you the pattern, how it works, what we're looking to do with it, where we're looking to enter, and also what to avoid as well. So in a ranging market, to qualify for a ranging market, we at least need to test the resistance twice and the support twice to confirm that's holding as resistance and support, giving us that range. So there's two types of range markets that we look at. We look at continuation and we look at reversal. So this is a continuation of a bullish trend. Say the market's moving to the upside, and then we start to see a bit of a range forming, and then we get a continuation. Obviously that's why it's called continuation, because we're continuing that bullish trend. And as you can see here is where we have our range of resistance twice and support twice, testing it twice to confirm that's resistance, and testing the support twice to confirm that support, and eventually we have a very sharp breakout. So what we're looking for is for a price to break out the range, come back, retest that range, and then continue in a direction. So for an instance, in this example, we're looking at continuation. We're seeing a nice sharp breakout to the upside. And again, that's a key thing, guys. You want to see the market break to the upside very sharply with a lot of momentum, and also you want to see it cover some distance as well. A nice rule of thumb is that I look for, if say for example the range is about 20, 28, 30 pips, let's say it's about 30 pips, you want your breakout to be at least be 30 pips as well. So 30 pips or more, if it's even double that, 60 pips, even better, but we want it to be at least the size of the range. So once we see a sharp breakout, we wait for price to come back and retest the range, and that's where we look for our entries. And normally what do we expect the price to do? Come back and retest the previous high, but most of the time we do expect to see price at least give us some type of higher high, or at least try to push past those highs there. So that's essentially the pattern we're looking for. We're looking to place our trades in around this area, again depending what type of candlestick patterns we get, and then we can look to take advantage of this pattern. And that is the continuation of the pattern. The reversal is quite similar, but it's in the name, we're reversing trends. So say we've got a bearish trend like so, and then the market starts to range, breaks to the upside for a lot of momentum, we wait for that retest, and that's where we look for our entries for the continuation. And this is our range here, as you can see, testing that resistance there twice, 1, 2, and then testing that support twice, 1, 2, actually 3 times for the reversal. And then we come back, wait for that higher low, the retest of that range, look for our entries around here, and then we look to go long and take that reversal. And again, we'll be aiming for that previous resistance here, which sent price back down. And then if this is a reversal, we do expect some higher highs to start forming. And that's essentially the pattern. The key thing is to always wait for price action and candlestick patterns for our entries, because price sometimes doesn't always play out the pattern. Sometimes, for instance, say we're looking at continuation, price just breaks through and we end up reversing to the downside. Obviously, if that happens, we don't be entering the market. Same thing for this could just be a false break to the upside, and we could end up just breaking through, and that's not a trade that we want to look for. So you want to be looking for price action, candlestick patterns in and around this area. Sometimes it's not always going to be perfect, sometimes it's not always going to bounce at the resistance here at the start of the range. It might go a bit deeper, it might even come back and retest the previous support down there for the range. But as long as we can stay within this range here, we will be looking for those continuations back to the resistance and then higher high, and same for the continuation back into the resistance and then a higher high if we can hold that trade further. But Essentially, guys, that is the pattern. Want price to really break out, show that we're continuing or show that we're reversing, wait for the pullback and look for continuations. Now, sometimes we don't always get the pullbacks into the range. Sometimes, you know, it won't pull back all the way, it'll be a higher low, which is fine. That's just not the pattern playing out. We want price to come back and retest the range. So those are our entries around there, and those are our entries around that area. And also, guys, you want to make sure that the breakout, you know, has at least, you know, 2 or 3 candles in the direction, not just one candle, because sometimes it could just be a false break, which is what we want to avoid. You want to be taking, you know, price having that false break, coming back down and just, you know, continuing in the opposite direction. We want price to really confirm to us which direction it's heading, pull back for us back onto that range, and we look for continuation. And the reason it works, guys, is because this range here creates demand and supply. In this case, and in that case as well, you know, creating demand because we're seeing bullish momentum come through that range. So when we do break out, this area will now be acting as demand zone, and we can see nice continuations from that, or reversals here from this demand zone, looking for continuations in the opposite direction. So that's essentially how we look to take our trades. Again, this pattern is very, very powerful when you combine it with multi-time frame analysis. Say this is like the 4H time frame or the daily, even better. You know, if you can go into lower time frames, hourly, even lower potentially, you can really maximize your risk reward, because if you know price has about 70-75% chance of getting back to those highs, you know, you could be taking advantage of a really nice amount of pips. And again, if that's the daily, you can look to hold your trade, you know, for a number of days and really look to take advantage of that swing. So that's how powerful the pattern can be. The risk reward is really good in this when you combine it with multi-time frame analysis. But essentially, guys, this is the pattern. I'll be moving on to show you some examples on the AUD CAD. We've seen a lot of them recently, and also there's a nice pattern on Euro AUD forming with this continuation pattern, but on the opposite side, so a bearish trend continuation on the weekly time frame. I'll be showing you how we can take advantage of that this week if the pattern does play out, of course. So we'll be moving on to AUD CAD, and I'll show you some examples now. Okay, guys, so on my screen I've got AUD CAD on the 4H time frame. So I'm going to walk you through some of the price action here using the replay tool and show you how we can take advantage of these patterns in the market. So as you can see, clearly got a bearish market here. Price is making lower lows and lower highs. So waiting for price to give us a bit of a range to work from and see if we can, you know, see if we can get that pattern to play out. So right now, getting a bit of impulse to move to the downside. Okay, so price is struggling to break through that resistance there, and obviously it's found that support, so a little bit of a range here actually. And if we can have a strong break through this, you know, see a strong break to the downside, we can come back, revisit this. There could be some nice continuation trades to the downside and just see this bearish trend continue. Okay, so we had a nice break there, but again, it's only one candle long. So that's again another key thing you want to see. You want to see price really break through and see at least 2 or 3 candles of impulsive, you know, price breaking through. Just because one candle can easily be a false break, and number 2 is that when you have 2 or 3 candles, it shows that on the lower time frames we're really putting in a nice healthy trend of pullbacks and continuations. Whereas one impulsive candle could just be a big breakout on the lower time frames, and price could do, you know, quite like a very steep V-shaped retracement and go against you. So we want to see price really push on, but in terms of pips, if I measure the range there, it's about say 60 pips, and the breakout is around, you know, it's still about 40 pips. So we need price to really still push on for us to really look at a valid opportunity here. And as you can see, we already retrace and price already impulsing back in. So this here is just, you know, a false break, sharp move down, sharp move back up, false break there, grabbing liquidity. So we're not interested in that pattern there. But let's move on. Let's see if we can get another pattern. Okay, here we're starting to range again. We're struggling to break through that resistance and that support there as well. So if I just draw a box around that price action, again ignoring this box, now focusing on this. Again, the trend is still bearish, still making lower lows and lower highs. We're still looking for that continuation to the downside. So let's see if we can get a strong break out of this range. Okay, we're still ranging, still stuck in that area. Again, still stuck in that area. Again, false break there, not enough for us. Okay, that looks a lot better. Nice impulsive push to the downside there, really breaking out of that range, and that's what we're looking for. We're looking for the market start giving us a bit of a trend in the opposite direction, looking for the pullback and then the continuation. So you can see the range here is about 30 odd pips, and the breakout is again 60 pips, so it's more than twice, so which is a good thing to look for. So now we want price to revisit this, and we'll trade it back into the prior lows of this push, which would be this level here, of course, if you hold this. So again, that would be a nice trade there. If you was to drop into the lower time frame, so if this is the 4H, you go into the hourly time frame, look at entries there, so on and so forth. You go into the 15-minute time frame, even, you know, look for entries around here and trade it back into these lows. But I'm gonna stick with the 4H just because it's easier to understand what's going on rather than so many candles on the lower time frames, just for the purpose of this video. So you can see, looking for a move back down into those lows, and then potentially lower. We just about spiked that low, but essentially we failed to really break lower. So that's essentially the pattern playing out, that break and retest of that consolidation and the push into those lows. And if we're lucky, we can see a continuation here. We haven't seen that continuation, and price is looking bullish again, but still, if price does react with this resistance again, there could be some more nice sells. So again, we're coming back into that. Again, you can go to your lower time frame, see how price is reacting. So far, nothing much there. Nice push to the downside, look to enter from that. And again, you can see nice continuations to the downside. So again, you want to give your stop loss a little bit of room, because it won't always be so perfect. Probably put a stop loss above that previous high there on the left. But essentially, again, the pattern is still playing out. Rejecting that, we're looking for a push back into these lows. And as you can see, eventually get a push into these lows. And actually got some new lows as well. So that's the pattern, you know, properly playing out, giving us another leg to the downside, you know, and seeing that whole trend continue. So again, we've tested it twice now, so you can still look for sells here, but the more it tests, the weaker it gets. So probably best to leave it alone after 2 tests. But again, if it does still react with it strongly, we could see some nice sells. So that's a strong reaction there. You could be seeing another move back down into these lows here potentially. Okay, so not quite, price is struggling, looks like it's getting into another range. So again, that's why I said, you know, just after twice is normally good. 3 times momentum might start to dry out, especially when you're seeing strong momentum in the opposite direction. But it does look like we're forming into another range here. So if you see what happens with this range, again, rejecting that resistance there, and we rejected that support many times as well. So if you can get a sharp break to the downside, a revisit of this, look for continuations. Again, we're still in that bearish market. It is a little bit dry, starting to dry out with momentum, but we're still overall bearish on this market unless we see a sharp break to the upside, and then we look for the reversal. And here you can see a very textbook false break there, massive wick to the upside, taking out a lot of liquidity there, which normally means that we'll probably break to the downside after that. As you can see, we do. So again, that's a really nice drop there. Again, if I measure the pips of the range, again, we're looking at around about 65 pips there, and the breakout again over 80 pips. So that's more than enough for us. Now we're looking for the retest of this, looking for entries. Okay, so not quite. Again, so again, that's not our trade there. You know, price is looking bearish here, but we want price to revisit this area. So that is not our trade. That's not the pattern playing out. We're waiting for price to come back, retest that, and then we look for our sells. So far, nothing yet. Again, price is still pushing, which is even better, to be fair. Normally when you see price really start to push on, it means that this here is a really strong area of supply. So if we do come back and retest it, you know, we could be seeing another strong reaction. And also, you know, our targets will still be the lows of this push, which is, you know, if this stops here, would be down here, which means the risk to reward, more pips for us to catch, even better trade. So we'll look to see if we can get price to revisit. Again, see price come right back into it. Now we're interested. Again, you can drop to the hourly time frame lower, look for your entries, and you see a really very strong push. And our targets will be these lows all the way down here, and you can see, you know, that momentum continues. I'll just press the play button. you can see we do get there and just about spike through and give us some new lows. So you can see the pattern does play out very, very well. And also look a little bit another of a range here as well. Price rejected that resistance 3 times, rejected that support twice, so another range there. Again, you can look to sell into this one. Yeah, this one might not be the best trade because we do have this support, you know, very, very strong support nearby. But again, if it does reject it strongly, we could easily see some new lows, or again, as you can see, it does play out again. So the important thing with this pattern is definitely to make sure that you apply it with, you know, other forms of technical analysis, other confluences. So again, that's a big part of my trading. You know, all the content I share with you in this channel, you know, a big part of my trading is putting it all together and using it, you know, to develop a good bias of the market and where we could be going, not just using trend lines, not just support and resistance, not just supply and demand, you know, not just ranges, moving averages, just using them all together. So like the pattern I'm showing you now, combining with other things, trend lines and support resistance, will really help the win rate of the pattern play out. But as you can see, you know, it happens time and time again. Again, it won't always happen. And the key thing is to wait for price action when we do get there. If price is just storming through this, then we just leave that alone and the pattern is invalid. But if we start rejecting that, we look for our sells from those areas. So that's essentially the pattern playing out, guys. Remember, multi-time frame analysis does really help to maximize the risk to reward for this one. And I'm going to go on to Euro AUD, which has a really nice pattern of this same pattern that I'm showing you now on the higher time frames on the weekly, that has played out very, very well recently. As you can see here, massive impulse to the downside, and then we got a consolidation there. So again, this is a continuation version of the pattern. Consolidation broke to the downside, a lot of momentum. As you can see, we retested recently and we're seeing that momentum continue. So it's very textbook, you know, impulse, correction, impulse, and we're coming back down to these lows. So I'm expecting these lows here to be taken out for Euro AUD with some lower lows, or at least come back and test it around the 1.52500 mark. So I'm still looking at carrying on this bearish trend here on the daily to the downside, back down to the lows. So we still do have a little bit more mileage of this pattern to play out. The only thing about this is that we've had such a big fall to the downside for Euro AUD on the daily, and we haven't seen much pullback. You know, price hasn't really gone to the upside, you know, pull back and then come down. Been, you know, slight pullbacks on the lower time frame. So potentially we could still see that pullback happen before we hit these lows. But if we just continue that momentum, we could be hitting these lows potentially by the end of the week or next week if we don't do that bigger pullback that I'm talking about. So we'll be looking at sells here for Euro AUD. We do have this trend line here in the market. As you can see, first, second, third test, we'll be looking at sells around this area to take it to the downside. And if we do start breaking through this trend line, start creating higher highs, that means the pullback will happen and we'll probably just leave the pattern alone. But if we can hold that trend line, there will be some nice sells to the downside, back down into these lows. And again, if I do get that measuring tool out, you can see we do have about 150 pips to the downside to our target. So still many pips to catch if this pattern does play out, and we'll be looking for sales to the downside if we can hold that trend line. So again, that's a nice pattern that could be playing out this week. Again, do watch out for that. That could play out. And if it does even play out even further, we could be seeing, you know, a price take out those lows and continue and see another leg to the downside. So that is something to bear in mind. But guys, I hope you do understand the pattern, and if you do need things explaining, let me know in the comments below, and I'll explain it again for you, or, you know, try and try to show you some more examples. But essentially that's the pattern, guys. Remember, wait for sharp breaks, wait for price to retest that area, wait for your confirmations, and then take the trade. So hope that does help, guys. Hope you have enjoyed the video today, and, you know, nice tip for the week, look out for what happens with Euro AUD as well. Okay guys, that is the end of the video. Hope you all enjoyed that and found that useful. Again guys, leave a comment down below if you want me to do a certain type of video, or, you know, certain type of content on the channel. Let me know so I can get that out to you guys, and leave a comment down below if you didn't understand anything or you want me to explain something in a little bit more detail. But that is the end of the video, guys. Subscribe if you haven't already, liked the video, and also hit the notification bell as well so you don't miss out on any uploads. But thanks for watching, guys, and I'll catch you guys in the next one.